In 2019, the Financial Times published a series of investigations along with the whistleblower complaints and internal documents exposing the accounting malpractices of a fintech giant providing payment processor and financial services. In June 2020, the company filed for insolvency after announcing that €1.9 billion in cash was missing. The CEO subsequently resigned and was later arrested. The chief operation officer was fired and went into hiding for 3 years. It sounds like something out of a movie, right? But it's not. We are talking about the Wirecard scandal, one of Europe's greatest financial scandals that hit headlines and sent shockwaves through the financial services world. The story is so outlandish that Netflix made a documentary about it. In this special TechTalk episode, we go beyond this story and talk about why fighting financial crime is so challenging, the financial risks in fintech, the red flags to be aware of regarding legal and compliance matters, how fintech regulators and consultants can work together, and much more. To help us understand this complex matter, we have the honor to welcome Pav Gill, who is a lawyer with extensive experience in global financial services laws, and who is probably best known for being the whistleblower who exposed Wirecard. Most recently, Pav was Chief Legal Officer of a digital assets exchange where he was responsible for all legal and compliance matters across the group. He is joined by Michael Weis, Forensics and Anti-Financial Crime Leader at PwC Luxembourg. We guess you are as excited as we are, so let's dive right in.
On 25th of May, we held in our premises the Anti-Financial Crime Conference, which focused on anti-financial crime and the reporting and investigating of misconduct in line with the whistleblower protection law adopted earlier in May in Luxembourg. And lucky us, because we get to have one special episode with one of the conference's distinguished guest speakers, Pav. Joining us as well is Michael, PwC's Forensic and Anti-Financial Crime Leader, whose team organized the conference. Welcome both.
Welcome. Hello.
Hi, thank you.
So this is a special episode indeed, and it's called the one on fighting financial crime. So I will start with the first question, and it goes to Pav. Can you tell us a bit about how you've become an expert in ethical governance and financial crime? Was it by design or by accident?
I think it was a bit of both. So I did start in corporate finance, and in my first law firm, I was actually part of the deal team that structured the 1MDB bond, which is the very infamous case involving the former Prime Minister of Malaysia. And it also has more fun characters in there, like Leonardo DiCaprio and stuff. So, that was, I think, the first foray, accidental one, I would say, but yet part of the job. And then over time, I spent, a few years in the Middle East. That was also quite interesting. Came back to Singapore, went into the fintech space, and then, of course, Wirecard. I don't know if that's by design. It's definitely not accidental in a way, but I was reluctantly put into that situation as a whistleblower. So I think after that incident, I did then tell myself, like, okay, this thing happened for a reason. And I'm going to now try to get further into, what financial crime is and fighting it. And just fighting the good fight with everyone else out there.
Michael, what is the fight against financial crime so challenging?
Well, it's like Pav just explained, there are so many things happening. It's a multifaceted topic, I would say. And it's an interesting period for the moment. Our global chairman, Bob Moritz, just answered in an interview recently that there's more financial crime to be expected going forward. We have a period of inflation, of margin pressure. People are under pressure to perform in business, and that's the perfect system, the perfect context where you would commit crime in order to make up the figures or to benefit in a different way and form. And then financial crime happens in a multitude of varieties. You can have the simple online scams that people are tricked into. You can have bigger fraud type of schemes. You can have money laundering, which is like the Champions League type of episode, I would say, because that's very sophisticated people that get involved into it. And then we have also the new technologies that are playing into it with generative AI, ChatGPT, not to mention. Those type of online scams are most likely becoming more and more powerful. And what we are going to see on the market there, on the victim side, will clearly be influenced by that. And on the other side of the fence, if you like, companies, it's not so easy for them to protect against, because, if you talk about those online scam things, it's individuals that are in the one or the other way tricked into something. From a corporate perspective, difficult to spot, because it might just be one or two customers, and it might be smaller amounts for the corporate, not for the victim, for the individual. So difficult to tackle there, and the people that are talked into something, tricked into something, might use their legit credentials to perform certain online activities. So nearly impossible, not impossible, but nearly impossible to easily spot for corporates. And on the other side of the spectrum, you have the highly sophisticated professionals, money launderers, corporate frauds, cases like Wirecard. These are people that, we have a podcast here today, but criminals like that look like us, wearing suits, well-educated, highly sophisticated people. You don't see that is a criminal when you meet them. So that makes it difficult to manage.
Yeah, so there's kind of an internal and external source of that, and then there is the one, let's say, more organized and the less organized one.
So very challenging indeed. Pav, why should fintechs care about financial crime? What are financial risks in fintech?
Fintechs, I think, by their very nature, they are in the financial tech scene. So if you're financial, you're handling money. And very important is the fact that customers need to trust you, because as a fintech, especially startups, you're a new company. How do you gain the trust of not just your customers, but your shareholders, your investors and stuff, and also regulators, right? So to me, fintechs need to have that that way of behaving, which says that legal and compliance and risk will be partners to the business team as well. So as long as we are all operating at the same line, no one's being put in one side, no one's being kind of like relegated in terms of importance, then I think that's absolutely key if you want to be a successful fintech. Because the minute, you have sacrificed your lines of defense, then the damage that happens after that is going to be very hard to restore. So do not take a myopic approach. Don't take a short-term view. Just do invest in those things, legal, risk, compliance. And I think that will be the strong backbone foundation to success.
On that note, what are the red flags that our listeners should be aware of when it comes to legal and compliance matters?
I think in terms of red flags, it can be internal as well as external, right? So internal will be from an employee's point of view. If you do see the way your fellow colleagues, the leadership team, whether it's senior management or it's middle management, like how they are behaving where legal risk and compliance is concerned, whether they just chuck it at the corner, they take many shortcuts, which are very risky for the sake of growing the company, expanding, whatever it is. I think those are red flags. And also how, the culture in the company is very important, right? Like how do they behave in terms of encouraging employees to speak up, talk about things that are worrying them, whether it's flaws in the tech or it's flaws in the financial processing, anything. So those are like really red flags from an internal point of view. From an external point of view, it's very traumatizing, I would say, if you're a customer and you cannot get proper customer service help when something goes wrong. Because again, it goes back to what I was saying just now. If you're a fintech, you're handling customer monies. The minute there's a delay or there's an era you need to have a very good customer service team there that's 24/7, that's responsive, and more importantly, does not copy and paste a response to you, but really has a bespoke approach in dealing with every customer.
What about you, Michael? What are the key topics financial crime concerns?
Well, to reiterate a bit what you just said, Pav, I think one of the key factors when we talk fintechs more specifically is growth and speed of growth. Because we see plenty of examples locally, internationally, and just need to open the newspapers of fastly growing fintechs that are very successful, but the compliance guys, the controls guys, are the ones that are struggling to keep up the pace and to evolve in the right manner in order to keep up with the developments of the company and to adjust controls that might have worked in the beginning of a startup phase, but when you have suddenly thousands or 10,000s of clients, well, it doesn't be fit for purpose anymore, and that's a big challenge. And then when you look at it more generically in the financial sector, I would say, I mean, you can also simplify financial crime elements into who, what, and why, I would say. The who is the customers, but also the perpetrators of fraud. Because in the end, we have always people that are committing fraud, and we have always people that are benefiting from it. So you need to look at that element. And we have the famous KYC topic since ages in the financial sector. But everybody is still struggling because it's not so easy in practice to properly have all those information at hand. When you look at the what, it's more about the activity, the transaction, what is the modus operandi of a fraud happening, why is something happening. You need to understand the challenges, what could go wrong and why it could go wrong to identify the red flags, because an asset misappropriation is a completely different story than the famous Wirecard fraud, where you had a bit of everything, but you had also this element of accounting fraud, where there was huge numbers in the balance sheet that didn't exist actually. But that is where, at least not directly, somebody would have benefited from that. It was more indirectly, whereas when somebody takes money out of the cash, it's a different story. So a lot of multiple factors that you need to understand from a red flag perspective. And lastly, the why. What's the motivation and the objective to do something? What are people doing? What are the risk factors? Why are they doing it? And there's a famous quote that I always like to use when it comes to risk assessments and how to deal with red flags. It's very stupid, but it's very true when you listen to it, because you don't know what you don't know. And when organizations are not looking actively for what could go wrong, or what risks do we have, or what awareness do I need to create, well, you don't know what could hit you. And it's a lot about awareness as well.
That's a very good. I like that quote very much.
What lessons did you learn from working with fintechs, and how could fintechs fight financial crime?
I mean, lessons learned having worked in, startups, SMEs, listed companies as well. It kind of goes down again to management, right? And the culture of the company. We just see this over and over again, which is everything gets sacrificed for the sake of growth, for the sake of share price. And, Wirecard was a good example, because it kept on saying that we are a victim of our own success. We grew so fast, we were so successful, and therefore we are kind of like still a startup, and give us some chances because not everything is perfect. But I think, that at some point in 20 years doesn't matter anymore. And I think this goes back to the earlier question as well in terms of fintechs. Regulators do not care if you're a startup. If you're going to be licensed, then you have to behave like a licensed company. And I think customers also expect you to behave that way as well. So a lot of these excuses that used to fly previously, I think they don't anymore, or they should not anymore. And what we also see now is with crypto, especially, things are just changing every day. Regulations can't keep up. Nobody can even keep up. Like I myself am in the crypto space for the last 3 years, and I'm learning every day. So if regulations can't keep up with the tech, and customers themselves have a knowledge gap on the product, then I think we are in a very interesting state of the world now where, how are we going to deal with these problems?
That's the big question. On that note, when we talked a few weeks ago, you mentioned the regulatory gray zone for fintechs. Could you elaborate a bit more on that? What did you mean by that?
Sure. So that was just following on for what I was saying, the gray zone. So this question applies very much to employees who are in legal risk and compliance. Like, what do you do? And it's always funny. So I always tell the C-suite of the company, you guys need to understand our position is very different from yours, because if your business fails, you can just say, oh, I was a crazy entrepreneur. It was a great idea. It didn't work out. But then those of us who are in legal risk and compliance, our fellow peers will be saying, what were you guys doing there all this while? So it's a very different thing. So we need to align. We need to work together. And again, if something goes wrong in the company, that is not the end of it, because you could always use that as an example to restore confidence, to boost confidence in shareholders, in anybody, even your investors. So in Wirecard's position, for example, if you have a company that's listed, of course, if something goes wrong, immediately it's like, oh my God, this is going to impact the share price. Okay, but what are you then going to do? Are you going to make it go away, which would be your natural reaction? Or are you going to then use that example and say that, yes, we found certain issues, but this is how we dealt with them because we've got a zero tolerance policy. Yeah, fine, your share price might dip for a while as also a knee-jerk reaction, but the fact that you identified, you were transparent about it, and you then said how you dealt with it, I think that would restore and actually bounce back if you've got pricing concerns. So in terms of gray zones, fintechs are always operating in gray zones, like crypto companies are operating in gray zones simply because regulations haven't caught up with them. But from a perspective of financial crime, I think the principles are always the same. We are always looking at things like KYC, AML, criminal activities, terrorist financing. Those principles will always apply. So for me, as someone who's headed up legal teams in these companies, if the business team comes to me and says, we want to launch this product, okay, there may not be a law saying you can do it in very black and white, but then the first principles still apply. How would the regulator react? And that's when you make the business call saying, I think we can launch this product because it ticks the boxes of what concerns regulators might have. This is how we assure customers it's a safe product. And I think as long as we follow those principles, then we have that confidence that, even though it's a gray zone, it's not black and white, we can still move forward and grow as a company.
Fantastic.
Michael, how can fintechs, regulators and consultants work together to fight financial crime?
Well, there are multiple ways, but also to resonate what just was explained by Pav, it's indeed, I couldn't agree more to the point that when you try to put something under the carpet, you can hide things only for a certain while. And I guarantee it will sooner or later explode. Sometimes it takes longer, but it always explodes. I mean, we make a living out of that when we investigate financial crime. Sometimes it was going on for a year, for 2, for 5, for 10. At some moment, it will get out of control and it will explode. And that is something that is very important. And where you said the regulatory gray zones, that is obviously something where the different stakeholders need to work together. Because, we have the regulators, we have the external consultants, we have the in-house compliance people, which, by the way, are never popular because often seen as not business enablers, but preventing business from happening. That's what you probably hear sometimes, Pav. But it's also an old saying. It's nothing new anymore, but you can always repeat the sentence. If you think compliance is expensive, try non-compliance, because in the short term, it might be cheaper, but it will be far more expensive in the longer term. Not only financially, by the way, as your example.
Reputational as well. Yeah,
exactly. So, but it's important that everybody in the business understands that compliance and risk ownership is for everybody, not for the compliance department or the risk department. And then to leverage on the experience of external specialists that see how things are evolving, and to also educate and cross-fertilize with the regulators, that they see what is happening on the market. They are able to adjust their regulation and their guidance properly, because often guidance is not super explicit. And there is something like soft regulation, I would say, where you have the experience, in particular in our job as on the consulting side, what are actually the regulatory expectations that are maybe not yet carved in stone, not yet prescribed in legal texts, but what is expected that you are doing. And that way you can help big deal and also companies, and I guess that also is something that you experience, Pav. You are never overstaffed in those control compliance functions. So when something a bit unexpected happens, then you are quickly struggling. So then you need expertise and manpower to help dealing with issues that might come up. Because indeed, otherwise you have a big risk. You put something under the carpet. It might be good for a while, but you can count the weeks when it will explode. So this collaboration is for me a very important element to exchange regularly on the market amongst professionals, people in the same sector, in order to keep up with the developments and the threats. Because financial criminals are very smart people and very well organized on their side. So we on the prevention detection side need also to be well organized.
Just a small follow-up question, but is it easy to get fintechs and regulators and consultants to work together?
Yeah, no, I mean, we have multiple projects in that field in Luxembourg, so it works. There's also a lot of industry working groups, and where ALCO, for instance, or the regulator are organizing conferences and meetings for those type of exchanges. So it's happening, and of course, they're always the ones that are more interested than the others. Maybe when you're a very small startup, you are not yet into those groups, but then you have also, by definition, less of those big risks. But when you grow as organizations, then these interactions are starting.
Okay, thank you. Back to you, Pav. What are the aspects lawyers, as yourself, should keep in mind to ensure compliance?
Yes, so, during Michael's previous response, it actually struck me while I was sitting and listening to it. I think lawyers and compliance people and even risk personnel, they are kind of safety officers in a way, right? So why is it in an aeroplane company you would want the safety aspect, the compliance aspects of how the plane is structured to be really there, right? Because I don't think anyone wants to fly a plane that has sacrificed or done so many shortcuts in these aspects. So why is it financial services is different? I don't think it's different. As Michael said earlier, the price of non-compliance is very great. I mean, if you look at, plain examples in recent times, a specific plane manufacturer is suffering because of what happened. So, we don't want any founder, we don't want any entrepreneur to be that issue. If you go back to lawyers, they're always having an issue in terms of, okay, something's not going right in the company, what do we do? And a lot of this is driven by legal privilege and confidentiality, client privilege concerns and stuff. And it is very concerning and stressful if you're a legal person in that situation and you realize your company is not doing things the right way. Because how do you navigate that minefield? Would you want to go back to the business team, the founders, and say that I don't think we should do this because it's flat out, it's just flat out not very legal sounding, and then risk falling out of favor with them? Because the one thing that in-house lawyers face and fear most is when the business teams turn around and tell them that you are not commercial enough. You're being too legal. You're being too black and white. And I think that balancing is quite stressful for lawyers because on one hand, you want to break that mindset that compliance are like, they're always going to say no, like that big sigh that, business team have like, we really need to run this past legal and compliance. Okay. We want to break that, right? So you have this internal conflict, like, do I be hyper commercial? Do I take that risk just to get into the good books of my bosses and the business team? So yeah, there's a lot of it's a big area, and I don't think the EU, the new whistleblowing law, has actually addressed the legal aspect of it because of the client privilege challenges in there. So, whether we find a caveat or an exception to lawyers, that remains to be seen. It also remains to be seen, I think, from a GDPR perspective, how protected some employees might be in those situations. So a lot of these issues are still up in the air. But I think my only advice can be just do your job and follow what you think is right. And I think as long as you have that compass, then that's just your safety net and you'll sleep well at night.
It's a very good answer.
Yeah.
I have a question for both of you. How can technology be used to enhance financial crime compliance?
Shall I start? Technology is obviously extremely important, will become more and more important. The subject of the podcast is also about technology, obviously. So technology should not be underestimated and will grow in importance. There is, however, a big but, because there is also no lack of great tools, software, artificial intelligence we talked about, but those tools are also only as powerful as the information they are fed with. Because a lot of large organizations, maybe different for smaller fintech type of startups, where they are grown quite recently, where everything is in good shape. Larger organizations, larger banks always fight with legacy systems and stuff that has been developed ages ago. So the data quality is always not helpful for feeding then powerful tools. And I used to say until very recently, I think it was 2016, there was an article in the Wired magazine which was labeled artificial intelligence is often more artificial than intelligent. I love that statement because it resonates a bit what I just said, that, there is strong tools, but if you have garbage in, it's often garbage out. I'm also surprised by the powerfulness and the speed of development of artificial intelligence quite recently. So that is certainly going to be a game changer. So it can become certainly much more powerful. But at the same time, you also need to be careful. Is this technology trained and prepped in the right way? Is it really producing the right results? Because apparently for some of the programmers of artificial intelligence, they are not able to predict what it is going to do, which I find a bit concerning as well. And I would come back to the fact that in the end, still, at least, it's always people who commit crime, and it's always people that are benefiting from it. So the human element should not be underestimated, and this supervisory element of the human in using and applying technology is very important for me still. Because don't rely blindly on technology. It started, I think, when was it? Last century, when the Titanic sunk. There was this famous statement from the captain of the Titanic who said, I summarized the sense of the quote, but why should we worry? This ship is unsinkable.
Right.
Well,
I think that's quite, known. What about you, Pav? Any thoughts?
Yes, I think from a smaller company perspective or fintech perspective, and we go back again to the question on startups. As a customer, when I have seen a new company, and then I've looked at the vendors and, for example, who they're using for compliance, KYC, transaction monitoring solutions, if they're using best in class, I'm always impressed. Because you're a small company, but the impression that comes across is you're not cutting corners. You actually mean business. You're choosing the best, right? So again, yes, compliance costs might be high, but think about the other side as well. Like how much confidence. You can't put a price on that. You can't put a price on confidence, customer ease, I would say. Do not compromise. Do not take shortcuts. Use the best tools, whether they're screening tools, best vendors that you can find. And I think, cybersecurity is often overlooked as well. Many people only reach for cybersecurity vendors when something goes wrong, when there's a threat actor that's activated. But, in the world we live in with ChatGPT and AI bringing movies to life, which we saw many years ago, in terms of, robots and Terminators and stuff. I think we need to be at that same pace as these threat actors, these criminals as well. So if they're it's like a police chase, right? If you're gonna be committing a traffic offense, you can't have like a small car trying to chase like the Lamborghini. You need to equip your force, your team with that those capabilities as well, which are state of the art, high tech. If you really want to battle sophisticated threat actors and criminals.
There's actually one comment I would make on that, because it is very true. I forgot that earlier. But yeah, transaction monitoring is a good example, or similar type of tools. Of course, it's super important that you have state-of-the-art technology there that it used. It gives you comfort. What, however, we often see is that these type of tools are not plug and play. And it's very important not to buy the best tool, but don't adjust it to your business model. Because that is often where shortcuts are taken. Okay, we have a great tool. Management might not even understand why do we need to spend an additional 3 months in order to fine-tune it to our business model. And then you have a tool that works great in retail banking. And in Luxembourg, we are big in investment fund management, for instance, to use one example. So the world's best retail banking transaction monitoring tool might be crap in fund management business. And that is important to also understand what am I using for which purpose.
I couldn't agree more. So the last question goes to Pav. What would you recommend to employees who find themselves detecting financial crime operations? What is your advice?
I mean, the advice is to really just do your job again, do the right thing. If your role is to screen and flag, then do that. Don't second guess yourself. Like, never second guess yourself when you're in these situations. It's like if you see someone who's passed out, don't assume that he's going to wake up. Like, straight away do the CPR and look for assistance. So just keep on doing what you're doing. Do not care about how raising a concern might look on you, because sometimes if you're working for a fantastic company, the company that's doing things the right way, you would be given a pat on the back. Oh, thanks for raising this. Thanks for flagging this. It's not always about making problems go away. It's sometimes about identifying them before others identify them. So that's how, for example, when I run my teams as well, I don't say that just because I am, say, the head of department or whatever, I don't want the juniors in the team to raise issues which they might find with my advice. I actually want them to do it, because I would rather be discussing these and having my own employees, my colleagues raise these concerns internally than then get embarrassed by an external event. So, I think that mindset has to be there. The culture, again, it comes back to culture. We need to have that kind of speak up culture, that collaborative culture. It's like, again, I know I'm using many analogies today. I don't know why, but
you are inspired.
It's also like a soccer team, right? Like, you want to have 11 guys on the pitch. They're all playing different roles, but they're all working as a team. So if we have that mindset, we will, score the goals, whether they're business goals or anything else, and we will succeed as companies, as fintechs, and also as, crime fighters.
Fantastic.
What are the key messages that you want, or the key message that you want people to take away from this episode?
It goes for both of you. So whoever wants to go first.
Yeah, from my perspective, I can say risk awareness, risk assessment is absolutely crucial. And here to make it important that we are not talking about AML risk assessment only, because that's a regulatory obligation in the financial sector. There is no real obligation to do a fraud or financial crime risk assessment in the broader sense. But that is important to be aware of what might be happening, a bit broader than just the minimum that the regulation requires. And maybe secondly, on the technology aspect, don't use technology, of course, but use it right. Be aware what are the shortcomings and where you need to adapt the technology. So a transaction monitoring example, make sure this, like other tools, are fit for your business model and are not just plug and play. I got something sold from a great company and I install it, and then peace of mind, I don't think about it anymore. That's not the way how it should work. It's a constant evolving cycle of improving the settings and evolving with the threats that are out there.
I think from my side, it would be a message to risk, legal, and compliance employees. I think be proud of your role. Do your best in the job. Don't second guess yourself, and always, stand up for what you feel is right. Do not fear. Have no fear. I think that as a person, as someone who's known as a whistleblower, I think there's always that question, like, do you not fear repercussions or anything? And my response is no. I think the only people that should live in fear are those that are doing the wrong things, not those that are actually doing the right stuff. So that is my biggest message, and I hope it inspires everyone out there. And yeah, I think I really enjoyed this podcast.
Maybe we'll hear from next whistleblower. They'll say like, "Oh, we heard the episode, so it finally gave me the courage to expose."
That would be awesome.
And then we'll be quoted in the next Financial Times article, like investigation.
Wow.
Hopefully that could be the case. But thank you so much. It was very inspiring.
Thank you,
and thank you for making the trip to Luxembourg.
Thank you. It's a pleasure.
Thank you, Michael, for helping us organize this episode.
And for being here.
Of course. Of course. Thank you.
My pleasure.
Have a nice day.
And that's all for today. This is Tech Talk, technology made simple over a cup of coffee. Don't miss out on any future episodes by hitting subscribe. Thank you for listening, and until the next episode.